Hello, today is Saturday, the 26th day of January 2013. My name is Derek. Thank you for tuning into today's video, which will contain technical analysis on the daily chart for both silver and gold. Moving on to Palladium, looking at the 5-day and the 35-day chart, finishing it off within some Fibonacci retracement on Apple once again. So let's get this started. Now, interesting for silver, down 1.4% on Friday, or 2% for the week. Gold was down about 0.5% on Friday and about 1 3/4 for the week, where Palladium up 2% for the day and 3% for the week. A lot different, to say the least. It's also Palladium and Platinum doing much better for the year thus far, but they're showing different setups, to say the least. Let's take a look first within the silver daily chart. What I said Friday on the turbo video as we were at this key 3120 level was to adjust the Fibonacci from this high to whatever the low happens to be. And had you done that, you would have seen that there would have been about a 40-cent push from that mark, which is about 1 1/3%, or a 23.6% Fibonacci retracement. Thus, coming back down to the low, now making it a increased chance that it's going to break it out, and a decreased chance that it's going to find the key support from that level. It's just increased and decreased chance, to say the least, as of now. After all, if an area is strong support, that means it can handle multiple hits at that level. The question is, will it? And it's very unclear at this point if it will. If, of course, you start to see that this thing is breaking down, or this area is an area for resistance, the next target is really the 50-cent barrier from 30 to about 30.50 within this range, and it's by far a must-hold level for the more mid or long-term time frames. Move this on to gold on the daily chart as well. You had a 61.8% Fibonacci retracement hit here, which is from this high, and the lows of 1527 placed in the summer of 2012. Test number 2. Now, the move technically made a higher high. In my book's a matching high. It didn't even need to have made a higher high, as long as it makes a higher low and then takes it to high. Well, it kind of made a high here. We see this red candle, and it makes a higher low. So now, as long as it the next low is higher than this one, you know what? Right now, it barely is, this one here. So let's adjust the time frame, or the Fibonacci, excuse me, from this low to this high. We'll do that right now, and here we go. There we are. Okay, so what's interesting is this candle here, the green one with the major piece spikes higher. It's an outside period, higher than the 2 previous periods before it, as well as lower than the 2 previous periods before it. But what you really can't tell within this is what occurred first, this high or this low. Because if you knew this high occurred first, then you already had Fibonacci support at this level. I don't know which actually occurred first, but just something to keep in your mind when you're looking at charts. Sometimes you can't get the whole story. It would be cool if you could actually double click on one of these with the software, and a whole new chart would come just showing the one or ones that was selected. With that being said, you can see that there really wasn't any support Thursday within this move. Friday there was resistance at that level, and now it's stabilizing within this mark in here. Let's move this on to Palladium. Much different prognosis for this daily chart, or actually 5-day chart. Each one of these candles represents 5 days. Some of them count Sundays, but still you get charts going back to 2011 and the high. Really, this has been a sideways consolidation period. And what I like about this within the 61.8%, you can see it had a decent retracement to the band, has broken through, and this last period we can see we've had support at this significant area. Now, this could easily still be that failed breakout that's going to cause a decent sized move. After all, what's the leading indicator going to be? Gold and silver's decline for platinum and palladium to go lower? Or is the leading indicator the platinum palladium rally, which silver and gold will follow afterwards. At this point yet, I don't know, but that's the things that I'm looking for within this. If this can hold and stay above really the 700 level for most of the month of February, I'll be looking for this to have a retest of this 850 level, which was placed in 2011. Switch this now to the 35-day chart, going back to the start of the millennium. And of course, this big high. We'll start the story right in here when the lows were set. Resistance found where it was supposed to. Higher low. Now, could you take the level out? The answer was yes, and then it made this area support rather than resistance, and then resisted this level as well. Okay, so after this occurred, I'll be looking for two areas to be finding support from this point here. One, previous resistance. Two, Fibonacci. Neither found support. This was a failed breakdown. So you can be worrying all you want here, and there was even good reasons to worry. Look at this candle in here. It may be difficult to see, but that's a bearish candle that was the bottom. And of course, when you're seeing it here, like, hey, wait a second, this is looking like a failure. Well, sure enough, it was. No Fibonacci resistance here, which means a decent shot of what happened, which is a fast move to the next level. It did resist this area here, as we can see on the pullback. And then the more likely it is you take it, or the more times you test it, more likely is you take it out. It took it out and had a nice clear breakout above this level, thus going sideways. If this high is going to be lower than this one and it takes this low out, then this area would be the must hold for this thing as far on a bullish level. If it, of course, it can actually really stay above 700 for most of the year, I'll be looking for this thing to have a test of this 1100 level late this year into next year. Okay. This is just it for the charts. Now let's do some analysis using a spreadsheet on Apple. Now we did this before, but we used the 2009 lows for Apple. This time we're going to use the 1985 lows done almost a third of a century ago. $1.81, 705.07. Let's write these numbers in here. Got $1.81 and 705.07. Let's just see how large of a move it is, because in Fibonacci we do high divided by low. So let's do that now. The gain was about almost 400 times higher from where it started. Now Fibonacci retracement, that's 61.83%. So let's do 61833 in one of these cells here. 033, excuse me. There we go. And what we're gonna do is we're gonna multiply the previous number and multiply that by 61% again, because that's how we get all the other Fibonacci numbers. Copy and paste this, say here. Maybe put this in percentage format. So there's percentage. These are the Fibonacci levels. So the question is, if it were to have a 61.8% retracement from 705 to 181, how much would that be? Well, again, we take the difference of high to low, which happens to be the 389 mark, which we're going to put in here. Now, I'm putting in dollar signs beside the A and the 4, so when I copy and paste, it will only take a 4. So we're taking that to the power of the percentage. But if I want to do a 61.8% retracement, I really need 38.2, or 1 subtract the number. So 1 subtract this, and we'll multiply the low of $1.81, which didn't work. Let me figure. Equals I want too many dollar signs. There we go. Let's put this into 2 decimals. So 1767 is the area I'd be looking for retraces 61.8%, and it will not do that. So let's keep on copying and pasting these numbers in. If it retraces 38.2%, it would be 72. Still, I don't expect that. If it retraces 23%, 172. The 14.6%, that would be 295. The 9% retracement would be 411, which is going to be the key number. And then just going through the rest of these, there we go. So therefore, if you do happen to have an Apple chart in front of you, take a look at the importance of this levels of the 651, the 621, the 574, and the 505. Now, the 505 is where it broke down from, and it lost about 50, 60 points down to about the 450 area on Thursday. Now, on Friday, it established a new low, stayed in that same area. To me, that is confirmation that we will test this level here of around 410, the low 410s area, to be a significant area. I expect that to be tested either sometime next week or after some sort of a bounce or upwards correction before we get there. So we'll see. It's a high probability from what I see on that this area should be tested. So I'm going to end today's video at that. So thank you for tuning in, and have yourself a magnificent weekend. Bye-bye.